Hey all, Mike back here with another stock strategy explained, and today we're going to be talking about the top dividend stocks that you should buy if you want passive income. Because I mean, what the heck? Who doesn't want passive income just coming into their bank account every month? That would be sweet, wouldn't it? Make sure you actively click that like button down below. That would really help my channel out. And make sure you subscribe for more future updates on stock analysis, stock ideas, and IPOs. And just a quick reminder, this is not legal, tax, financial, or investment advice. Make sure you do your own research before you do any sort of investing. But starting off, who doesn't like passive income? It's basically when you sit around, do nothing really, and you make money into your bank account. I mean, heck, I could be sitting on a beach right now making passive income with some of these dividend stocks. So I'm super excited to share with you guys some of my favorite dividend stock picks. The concept here with dividend stocks is making your money do work for you. So you made a lot of money, put that into the stock market and it will make money for you for doing basically nothing. However, there are some caveats to dividend investing. Watch to the end to see why I love growth investing right now more than dividend investing. But first, let's get into some math to understand how much you need to invest to fully make a passive income. So for now, I'm just going to assume that you just want a side hustle, and we're going to assume that a good side hustle is about $1,000 a month. That's actually a lot of money, and that would be a nice side hustle. But $1,000 a month would equal $12,000 a year, just 12 times $1,000 a month. And then we need to take a look at some of these dividend ranges. So in general, a dividend stock on the low end would return about 3%. On the mid-range, they'll return about 5%. That's probably the median range and what I would expect a lot of these dividend stocks to return. And sometimes on the high end, you might even get 7%, which is pretty high, but there are two stocks in here that I really do want to point out that can actually return you 7% in dividends. And just doing some quick math, this will actually be a good baseline for you guys to understand how much you need. If you want to make $12,000 and you want a safe and stable investment with a 3% dividend yield, you'll need about $400K invested, which is definitely not a small amount. However, if you're willing to go just a little bit more risky, risk it for the biscuits, and try to aim for those 5% dividend returns, you probably only need about $240K invested to make $12,000 a year. And then last but not least, if you're willing to go for that home run, go for that high risk, high reward 7% dividend yield, you really only need $175K to make $12,000 a year. So as you can see, it all depends on your risk profile, if you're willing to risk it for the biscuit, or if you're kind of wanting to take a step back, play it safe a little bit. And so hopefully these numbers will give you a sense of just how much you need to invest to make passive income. Obviously, this depends on your situation, how much you want to make per month in passive income versus how much you have to invest. There are some calculators that I will link down below, but it all depends on your situation. These are just some good numbers for a baseline. And so with that, let's get right into some of my top stocks that I love. There's going to be a lot of ideas, so make sure you get out your notebook and pen, take some notes down here. But there's really going to be 4 categories of dividend stocks that I really love because they have high dividend yields. We have high yield corporate bonds. We have REITs, which are real estate investments. We have utilities, and we have consumer staple individual stocks that actually have a high yield. So first up, let's take a look at the high yield corporate bonds. If you don't know what a corporate bond is, the TLDR is it's a IOU from a company. They basically want to take out a loan. Let's say they need to buy some machines or equipment and they take out a loan and they issue bonds and then they repay back that bond with a fixed interest rate. So it's basically just a loan that a consumer can buy. So the first stock we're going to take a look at is JNK, which I affectionately love to call junk. Disclaimer, I do own this stock, but I really like it because it is a high yield bond. So they have a 5.5% dividend yield, but I will say it is a little bit high risk, high reward. But because they're higher risk, they pay out more in dividends. So it's, high risk, high reward. So be careful of this one, but I personally love it and I've held it and I've made a decent amount of dividends on this one. So the next one to take a look at is VWEHX. This one's kind of a mouthful, but it's basically Vanguard's high yield corporate fund. This one only returns about a 4.7% dividend. So not as good as junk, but I also, disclaimer, I do also hold this one because freaking Vanguard. Who doesn't love Vanguard? Vanguard is the GOAT of all index funds and ETFs, and I really trust them. I think this one's a little bit more stable than junk, but obviously because it's a little more stable, it's a little less reward at 4.7%. The next one to take a look at is GHYG. This one's also a little bit of a mouthful, but it's basically iShares International Corporate Bonds. So if you want to diversify your portfolio, I mean, who would want to diversify their portfolio? Jokes right there, I know. But if you want to diversify your portfolio for corporate bonds internationally, this one has about a 3.42% dividend yield. Not as high as some of the other ones, but that's because it's international and it is mainly for diversification. I don't necessarily recommend this one because I don't love diversification as much, but up to you guys. The last one here is SPLB. This one's SPDR's long-term corporate bond. So this one is done by the same people who do like the S&P 500. So very, very stable, very, very well known. This one only produces a 3.57% yield. So not nearly as high, but if you want stable, this is definitely the right place to go. Very, very little risk compared to junk and the Vanguard one, but obviously less reward. And so with that, those are the high yield corporate bonds. Again, I recommend junk and the Vanguard one, but a little bit high risk, a little bit high reward, but they offer a very sweet 4 to 5% yield, which is very, very nice. So the next category to take a look at are REITs. So if you're an investment noob, this is basically a great way to invest in real estate and get cash flow. Legally, if you're identified as an REIT, you have to pay a certain amount of dividends out. So legally, these companies have to pay out a dividend. So it's a great way to invest in real estate and get a dividend and get some positive cash flow. So I have 3 stocks here. The first one to recommend is VNQ, which is the Vanguard Real Estate ETF. I love it because it's an ETF, I love it because it's Vanguard, and I love it because it's real estate, and it has a pretty nice dividend yield. It has a 4.20 dividend yield, get it, 4.20? But that's a really nice dividend yield for real estate. Again, it's a great way to get your foot in the door for real estate. The next one that I really like is American Tower Corp. So this one's only 2.18%. But I love it because of 5G. So watch my video that I'll link down below on 5G stocks. But I think it's really poised to make a lot of money from leasing land to 5G towers. And the next one to recommend is Prologis, which is PLD. And I really like this company because they do commercial real estate, specifically in the supply chain area. And you can imagine with e-commerce, you're gonna need a lot more real estate to house all of those goods to quickly get you all those Amazon packages. And this one has a dividend yield of about 2.37%. So again, not super high, but I really also like the growth story of some of these stocks. And so with that, those are the 3 REITs that I recommend. Again, a great way to invest and dip your toes into the real estate world, especially in corporate real estate, which not a lot of us can do. The next category to take a look at are utilities. So obviously this one makes sense. Everyone needs utilities. Everyone pays monthly for utilities, whether it be electricity or gas or water for, to flush the toilet. So the first utility stock that I love is IDU. So this is iShares US Utilities ETF. I love it, number 1, because it's an ETF, so you get a basket of utility companies. Number 2, I love it because it's iShares, which is a well-respected investment portfolio company. And this stock, IDU, has a dividend yield of 6.77%, which is insane. And we're now starting to get into the big leagues of high reward dividend yield stocks. So I love this stock mainly because it has a super high yield, but also because if you think about it, we're never going to stop needing utilities. We are always going to keep on paying for utilities. Like, we use more electricity and more water than ever before, and we're gonna keep on using it. Like, I need to flush my poops, right? And I need water to do that. The next one that I also like is VPU, which is Vanguard's take on utilities. They have a 2.99% dividend yield. So less than half of iShares, but again, it's Vanguard, they're well respected, and this one's gonna be a lot more stable than the iShares one. And last but not least is a company called Edison, which is actually a utilities company based in Southern California. And I really like this one, mainly because they have a high dividend yield of 4.25%, but it's also based in Southern California. Everyone's gonna need electricity and water and energy in Southern California. So I really like this California play. And with that, we wrap up utilities. I think this one's one of my favorites just because, again, everyone needs utilities. You can't go wrong with something that everyone needs every day. And the last category that I really like are consumer staples. And why I like consumer staples is, just like utilities, Everyone needs to buy these. So you can imagine toilet paper, you can imagine shampoo, you can imagine light bulbs. Like everyone needs to buy these consumer staples. So obviously in consumer staples, there's a lot of ideas, but 3 of my favorites here is number 1, 3M, which is the manufacturer of a lot of consumer goods, a lot of healthcare goods, even some of our face masks that we use for the coronavirus pandemic, they are manufactured by 3M, and they also manufacture a lot of other household goods that you would normally buy. And I like them because they have a 3.39% dividend yield, a little bit on the lower side, but obviously, as you can see, 3M is not going anywhere anytime soon. They are a huge company and they're very, very stable. So I think this 3.39% dividend yield is a little bit on the lower side, but you can almost guarantee that you're going to be seeing this dividend for the foreseeable future. You're going to see this when you retire. Your kids are going to see this dividend yield. The next dividend stock that I really like is AT&T. You obviously know AT&T in America. They provide cell phone services. And I think this one is the GOAT of all dividend stocks, because it has a yield of 7.29%, which is insanely high and a great dividend yield. And I also really like this one because obviously with cell phones and data, people are going to keep on needing it. And if anything, people might even be paying more for 5G. So I really like the stock story here. I really like the dividend yield story here. My personal winner, my GOAT, my top dividend yield stock goes to AT&T. The next one that I really like is China Mobile. Very similar story to AT&T, but based in China. And this actually has a larger yield at 7.37%. I like this one, again, because it's the same play, but just in China with a lot more people. So I think both AT&T and China Mobile are my top 2 dividend yield stocks here. And they potentially have a nice growth story here too. So that's why these are some of my favorite stocks. And with that, we wrap up the consumer staples. Again, these are some of the most well-known companies that everyone's going to keep buying. You can imagine if people keep on buying toilet paper and keep on paying for data, these companies are going to keep making money so that they keep on paying out these dividend yields. And so with that, that wraps up some of my dividend stock recommendations for passive income. But like I said, at the end, I would touch on why I don't love dividend investing as much as growth investing. And the main reason why I don't like dividend stocks is it has to do with taxes. So you can imagine if I get paid $10 in dividends, even if they're qualified dividends, and if you're a stock noob and wondering what the heck is a qualified dividend, it just basically means you pay less taxes on the dividends. So if I get $10 in dividends, no matter what, I have to pay taxes on that immediately because it immediately counts as income. So you can imagine for me, maybe I'll get $7 after I pay taxes. But if I invest that money into growth stocks and that growth stock goes up by $10, again, I still have that $10 gain on paper, but I don't have to pay taxes because I haven't sold yet. And so that's what I really like, especially for me as I'm young. I really want those gains to compound. So when I get a $10 gain, whether it's dividends or stocks gains, I want to keep on investing that money. So because of that, I don't love dividends. So I have a little bit of dividends, but most of my portfolio is in growth stocks that I can just keep in the market and I can just keep in without having to pay any taxes really. And so to wrap it all up, if you're a growth investor like me, who's a millennial and you care about growth, then dividend investing might not be for you. This is mainly for people who want passive income. So you can imagine if you're about to retire, if you're about to live it up and go party when you're 60 years old, dividend stocks might be right for you. Or if you want to retire early and you just want positive cash flow, dividend stocks might also be for you. And with that, we wrap up my top dividend stocks for passive income. Remember, make sure before you do any sort of investing, you understand a company's product strategy. And most of all, make sure you make money. Peace.